Hi, this is Nick Kazan, Chief Operating Officer of BDSec with the first market update of 2015. One of the things we want to talk about today is that the FRC, Federal Regulatory Commission, is under new leadership. This is a organization that is critical to the development of the Mongolian capital markets. In the past, this is an organization that has actually made it very difficult for MSC-listed companies to raise capital. The time they take to respond and approve requests is an area for concern, and the MSC, as it is not widely regarded as an efficient place to raise capital. And this new leadership, we hope, are comprised of professionals that understand this and are capable of changing that. In particular, one company, symbol ZOO, Zeus, it's a real estate company, MSC listed. They applied for a stock split back in mid-2013. That stock has been halted ever since then. Shares of HB Oil, the company HB Oil, issued a convertible bond back in mid-2013. The board unanimously approved conversion, and that was 1 year ago. And 1 year hence, those shares have not yet been converted. And so these are two areas that the new leadership on the FRC has to address immediately. They have to begin to implement the new securities law. Well, it's actually the old securities law that was passed in late 2013, and there just simply hasn't been any progress on that front. I think the next area worth mentioning is the macro environment and political environment in the country. If you recall, a new government was formed in November of 2014, and a new Prime Minister Sakenbeleg, was elected within the parliament to lead the government, and a grand coalition was established basically between all political parties within Mongolia. They control 73 of 76 parliament seats. The two most important issues for them, based on statements that policymakers have made, was to get the Erdnus Tavantogoi project going. That's one of the world's largest coking coal projects that is largely undeveloped, and also Oyutogoi Phase 2 and project financing. So the market has received precious little information as it relates to both of these. They're both critical for the Mongolian economy. As we look forward in the first half of 2015, the Mongolian economy is going to be very challenged. We find it very hard to see how we're going to have any GDP growth in the first half of 2015, because number one, foreign direct investment continues to fall. It was down 53% in 2013, 70% in 2014, and there's no reason to think that there'll be any recovery until these landmark projects, ETT and OT, are resolved and moving forward with investment going into these projects. And so, looking out to the first half of 2015, you also have a budget cut, fairly severe as far as we can tell, which is actually something that is a positive as it relates to Mongolian finances and necessary. But government spending comprises a great deal of GDP, and so you have no foreign direct investment. The Bank of Mongolia recently raised rates, and then you have cuts in spending, and so those are going to combine to make it very challenging for economic growth in 2015. You add to that that the debt markets are beginning to understand this quite well, and you've had a fairly steep sell-off in Mongolian sovereign credit in the last 30 to 45 days. And we don't know exactly where that is going to stop, because The way we see it is Mongolia is kind of caught up in the broader sell-off in frontier resource credit. And while that sell-off, broadly speaking, was mostly focused on oil-producing economies, we think it's quite obvious that Mongolia, as a resource-intensive country that is experiencing issues with government policy, that those bonds are being sold off in sympathy. And so that's an area for investors to watch, Mongolia's sovereign credit. And to end on a good note, it's not all bad news. We continue to highlight certain MSC listed companies that, despite the slowing economy, despite the falling currency, are actually doing quite well. And the one we would like to focus on is Gobi Kashmir. We'll see their full year financials very soon, but in the first half of 2014, Gobi Kashmir grew revenues at 41%, grew profits, EPS at about 210%. The company trades for about at 7,000 tugriks or so, which represents about an 8 multiple on 2013 earnings. If we bring forward Gobi's growth and take a guess at a full year earnings and revenue assumption, you're talking about a company that's probably trading in the 4 times earnings range, and yet they have all of their expenses in Mongolian tugriks. The Mongolian tugrik has been under a great deal of pressure, as have most emerging and frontier economies. But fully half their revenues come from foreign exchange. And so this is really providing a big tailwind for Gobi Kashmir. Gobi Kashmir is Mongolia's leading brand company. And so for investors looking to put some money to work here, we would recommend buying Gobi Kashmir. And thank you for listening. We'll be back very soon with another market update.